record. Okay, guys, we are back, and what I want to go over with today with you is basically the lead flow, the ability to do door knocking, the lead flow. I'm not real big on door knocking, so it was a request to go over this. I don't understand why my Facebook isn't live here. I can't see the picture here. Listen, door knocking, when you're door knocking, you have older leads and you have leads that you've already had for quite some time, or even new leads that you can't get a hold of, you can't reach them via phone. The important thing is you got to make sure that you have the stickers. This is a very simple process to go through, guys. When you're door knocking, you want to make sure that you have the stickers. As soon as the individual contacts you, if you're in that area, do not call them back. Just go right to the house. So if Mrs. Jones were to contact you back, check the phone number on the lead, and then get right back to the house. Just don't call them, go right back to the house. You know they're there, and they're probably contacting you from, that particular that area. So hold on one second. I'm struggling to get this Facebook live. All right, there we go. Anyway, I'm here to get it out to be simple. You have to have lead flow, right? This is going to be a real simple training. I'll make it quick, but you have to have the lead flow coming in. Being trained on your products is a very simple process. A lot of people go to their upline for this. My suggestion to you, if you want to be a top rep and learn the products well, you go right to the carriers themselves and get all the training that you need. I want to go over leads real quickly. I mean, 9 times out of 10, you can get $1.50 leads, $3 leads, times 10, times 100, that's $300 leads that you would receive. And there's definitely sales in there, even though they're all leads. Now you're going to get people that weren't seen, you're going to get individuals that have been seen, and you're also going to get people that just don't want to work with you, and that's okay. That's why you purchase the old leads. You're going to automatically put your mind together to know that you're not going to reach all of them, but you don't have to. So don't be worried about being frustrated over the phone and somebody says no, move on, go for no, in fact, because the yeses are behind that. If you got $8 leads and you times that by 50, you got $400 here. You have the ability to have A leads and work these two together. Now I put week 1 for this. So if you're a new rep, get into the action by cheapening the process and your expenses down to get into the business. Now, once you inherently put $300 down, you should automatically put that together in your head to get that back that very same week. So you're just reinvesting the same $300. On the second hand, you got $400. You should be investing that same $400 the very next week. And it's very simple. So if you have people that you're not being able to get a hold of, you got to have the door knocking stickers. And what I do is I write on the bottom, missed delivery. So it almost looks like it's a UPS driver that did it, and they do call back. The part of this puzzle that I don't want you doing is I don't want you contacting the individual as soon as they contact you. Do not answer the phone, let it go, and go right to the house. You know they're at the home because it's obvious that they got the sticker. So shoot back if you're still in that area and get that information into their hands. Does anybody have any questions while I'm doing this? Anybody have any questions? Robert, you had suggested door knocking. So what is your issue with door knocking? Robert, Can you open your mic up?
Yeah.
Yeah. What kind of problem were you having with door knocking? Give us some ideas behind this request that you wanted me to go over.
Say that again. Couldn't hear you.
Give me some ideas on door knocking and what you may be missing. What's the problem with door knocking with you? What do you need help with? What part?
Yeah. I guess the big part is actually getting in the door.
I mean, is that something that, I mean, you are dialing the phone also, right?
Because right now, without leads, I'm just strictly door knocking.
Okay, so you don't have leads at all, period.
Right.
So you're going door to door.
Right.
Okay, got it. Now, what's stopping you from having the lead flow that you need?
Finances.
Okay, so do you have the ability to get into the older leads that are 50 cents a dollar, things like that?
Say that again. This song volume's real low. I'm trying to adjust it.
I'll speak up. Do you have the ability to get the B leads that are somewhat a dollar and less, sometimes 50 cents, $3? You have the finance.
I can do that.
Okay, so that's where we're going to start you. We're going to get you the B leads, okay? And even if they were $3, you get 100 of them for $300. You know, I tell a lot of people, look, don't be worried. As long as you're with me and you're doing this training and everything, and you're reviewing the training from the past, you're going to get this every week. So you're going to, you know, get the training that's necessary, but you got to get this thing in here, and you got to get in a few homes. So when I'm teaching this, you know what you're running into, and then you can really use it. So get through week 1, and then, you know, hopefully we get this number out of you, which I think you will if you do it the way I teach you to do it. And then you get into the $8 final expense leads, and then you move up to mortgage protection. Now, there are also $3 mortgage protection leads also. So, you know, you can also have those, and those are pretty powerful too. And those go down in price as the time goes on. So it starts at $3 for the first 30 days to 90 days. And then after 90 days, it goes down. I think it's $1. And then from 9 months to a year, it's 50 cents or something like that. So you can definitely get involved in that. And I got to find your territory. What area are you in again?
Sumter, South Carolina.
You're in Sumter?
Yes.
Florida?
South Carolina.
Oh, South Carolina. Oh, I'm sorry, brother. I talk to a lot of people, boss. You know, you have the stickers, right?
Who?
When you're door knocking and somebody's not there, do you have a sticker?
Yeah.
Okay. I want you to write on it, right on the bottom, put missed delivery. It helps them. You'll get more people if you write missed delivery on there. On the bottom or on the top, anywhere there's space. But when you get leads, anyway, you've got to get some leads in your hand for sure, you know, and we got to get you up and running. The end result is that if we can get you the lower cost leads and you get a sale out of it or two, you're immediately to reinvest that money. The only way you're going to get out is if you get out there, get the sales, put gas in the car, and then reinvest it, you know, as quickly as possible. So that's the only way out, man. You know, getting a loan, getting somebody to give you a Visa card or a credit card or something like that would be very helpful too. But that's door knocking, I mean, in its simplicity. So if you're going door to door, Mrs. Jones, I was right down the road here, and I'm a licensed life insurance rep. I would have an ID badge around my neck and be able to show that something that's.
Yeah, I got that.
Okay, good. And at that time, say, look, there's really no obligation. Here's my card. If you would like, we set an appointment up with you and Mr. Jones. I was just down the street taking care of your neighbor, and I figured I'd walk the neighborhood and see if anybody else needed any help. And that's basically, you know, basically how I did it. So simple, and it makes them more comfortable. Remember, they don't know you, man. And in today's world, it's scary to let somebody in the house, you know? So what I would do is I try to set an appointment from an appointment. Or set an appointment from a visit. Guys, mute your stuff out.
So there's nothing special to be saying to like to have people to get you, to have people to let you in.
Well, yeah, you could easily tell Mrs. Jones, hey, look, you know, I'm a final expense rep. Here's some of the companies that I work with. Show them, you know, show them a Mutual of Omaha folder. Everybody really knows Mutual of Omaha, and show them that this is one of the carriers that I have, low price, high payout. All I'm trying to do is, you know, help your family out. Like I said, I was right down the road already taking care of a family. Here's my card. Is there any way we can set an appointment up when Mr. Jones is home, or you guys want to see the information now? I can always give it to you now. Is that okay? But believe me, Rob, a lot of the companies that are huge today, billion-dollar companies, were started back in the 50s and 40s and beyond our time, were all done door to door. You know what I mean?
Yeah.
But this system is more of a trustworthy system. Your way works, but you got to have the language. And you know, look the part, show them the badge, show them some tangible proof of the company that you may work with. Some of them show a folder or something like that, and make sure that they trust you. Bottom line, they got to trust you. You know what I mean? You know, lead flow is absolute. You got to have it. You can't be in this business. It's very hard to get in this business and don't have money. And you know that all that money's there to get, you know, and that's your struggle. So, you know, you might have to liquidate something that you don't want to get rid of. I mean, you got to come up with something, you know what I mean, to get going, brother. The best way would be to get the lowest cost lead. So next week we will work on finding the 50-cent leads. And have you sold mortgage protection at all?
No.
Okay. For Facebook, I'm also doing a webinar here. So what we're going over is door knocking, and for an individual rep who doesn't have a dime and just goes door to door, literally making his money. So eventually he's going to get enough money to get the lead flow going. It's just one of them things, you know, not everybody's in that position, but for anybody that is door knocking and doing that on the side, aside from setting appointments, you shouldn't really be door knocking if you're setting appointments properly, by the way. But if you do want to do door knock, you know, make sure that the sticker's up there. I write missed delivery on it. I also get back to the home. When they contact the phone, I don't pick it up when you're in that territory. Let it go, let it ride, and have the individual, you know, they're at the house because they got the sticker on the door. Just get back there if you're in the area as fast as possible. If you're no longer in the area, you obviously have to call them back, you know. You're in a tough situation, brother. The only play you have is getting the cheapest leads possible, and then, you know, grinding from there, man. Is there anything in the sales process in-home? How do you feel with the in-home sales process with final expense?
For the most part, once I'm in there, I feel real good.
Yeah.
It's just what would be the perfect time to maybe ask for referrals? And I've done that before, and a lot of people I'm coming across, they always say they don't know anybody.
Well, you know what? They got a cell phone that's packed with people. So if you do it in a manner, sometimes the best time for me to tell you guys the best time to get a referral would be the time you're delivering the policy. It's all said and done. They trusted you to get the policy. Once the policy is through, they understand you delivered it. If you deliver policies, you'll get more referrals. You know, Mrs. Jones, my business is all run on referrals. You know, if you really appreciated what I've done for you here today, I would love to help your family and friends. So I have this list here which I write down the referrals of individuals that I've taken care of. And, you know, all I tell them is that, you know, I took care of Mrs. Jones, and she had enough heart to think of you and just say, you know, if you might be interested in taking a look at what I offer. And that's, you know, I do final expense life insurance programs that are about the cheapest in the country, but they pay out the most. So even if you have life insurance, 9 times out of 10, I can beat the premium and get you less premium for more payout. Do you guys have any time tomorrow, 2 p.m., for me to drop this information off? Just take a look at it. That's about it. You know, but getting them to write it down is as simple as saying get your cell phone out. So get them to get their cell phone, because that bad boy's packed with people, absolutely packed with people. You know,
Mm-hmm.
so they get their celly out. There's no doubt that you'll get referrals. So with that being said, how about your in-home presentation? Are you kind of learning what I've taught to do the presentations?
Again?
Have you been learning and studying my systems to learn how to do in-home sales processes?
Me and my wife do it.
Okay, good. So have you been reviewing the webinars that I've put together on YouTube and checking those out? I'm trying to get, you should.
Yeah, I review them things all the time.
Okay, great. Let's go, you know, let's check out a final expense scenario where you walk into the home and you're sitting down. You know, you have 2 different tables 9 times out of 10 to sit at. You do not want this situation. Do not have Mr. Jones here and Mrs. Jones here and you're here. You got to have these 2 side by side at all times, okay? Work that out. And even in a circular table, do not have this situation out. Have one you're staring in the eye and the other one over here. But no special way to do it. Whether I'm sitting next to a woman or a man, it doesn't matter to me. I'm not too particular on the whole wife sit next to me or the husband sits next to me. It doesn't matter to me. But at the end of the day, when you're in this home, your job is to find the need or create the need. Now, a lot of people understand this by the fact that the need is cremation or final arrangements. Yes, that is what you're there to take care of. Demographics mean a lot, because if demographics can be changed up and enlarged by a final expense location, like there's trailer parks you go to, but there's also $100,000, $200,000 homes you go to too. You know, and you could be in the hood also, but wherever you're at, your job is to create the need. Create the need. What the hell is creating the need? That means taking care of every aspect that the other individual will be left with and making them understand some things. Hey, Mr. and Mrs. Jones, did you know that this is Mr. Jones? This is Mrs. Jones. Let's say they're 65. She's 65. Long story short, you know, I would say this first. You know, ask them, do you guys have a mortgage still? If they're in a home, ask them, do you still pay a mortgage? That's a good question to ask, because you want to see if there's any way you can turn this thing into mortgage protection and final expense arrangements. Okay. So you have the mortgage of $1,000. Now, the second question is Mr. and Mrs. Jones, out of the 2 of you, who earns the 2 of the higher Social Securities? Who earns the 2 of the higher Social Securities? Mr. Jones. If they ask, why are you asking these questions? Well, I'll tell you why, Mr. Jones, because when you leave that to Mrs. Jones, it takes 6 to 12 months for her to receive that. 9 times out of 10, it could be 6 months. Now, it could be faster, but it's looking like a lot of people are dying, man. So the problem is if Mr. Jones has $2,000 a month coming in and she has $1,000 and the mortgage is $1,000, you know she's already done. She can't survive. Now, the only way we can survive this is if we ask the next question. Do you guys have life insurance in place already? No, we do not. In this scenario, I'm going to say, no, we do not. do you, Mr. Jones, are you leaving her anything else behind, like a pension or a 401k? No, we're not. So in this scenario, which you will run into, you have this individual, Mrs. Jones, living on $1,000 a month for 1 year. Her mortgage is $1,000 a month. So see, you're not there just to take care of the final arrangements and cremation. You showed them the real need in this scenario. This happens a lot. Now what happens is that you're able to get more premium out of individuals simply by adding the numbers up. You got the $1,000 a month, that's $12,000 a year she needs. Now, if God forbid you ask this question and say, Mrs. Jones, would you stay in this home if Mr. Jones is no longer in this house? If God forbid he passed away. And a lot of people say no because it could be too big of a house. They just don't want it. And the other point is that there's equity in this house. So your next job is to make sure that you're protecting the equity inside the home so the bank doesn't snatch it up. The equity is what you want to be protecting, so you need to buy her time just like in mortgage protection. So you're going to take care of the final arrangements plus mortgage protection. And this is a system where if you're in the right home and the finances are correct, you can get larger premiums. You understand? So at the end of this route, you're putting together a policy, $100, $200. And now I want to teach them about the product itself. So when I'm teaching people about the products, which a lot of you guys don't do, which you got to do because it's a big deal, they're buying this damn thing. They should know something about it. So Mr. Jones, I just want you to know, when you're paying this $100 a month, not only does Mrs. Jones receive $25,000, but God forbid, let's say 10 years goes by and Mrs. Jones passes before you. Well, what happens is you're just going to take the cash value out. So let's say there's $5,000 built up into this thing. See, in our policies, we have a way to pay people twice. Now, there's three angles on this. One, Mr. Jones, you die, Mrs. Jones gets the money. Number two, Mrs. Jones dies, Mr. Jones, you receive the money. And number three is if God forbid your doctor says that you have 12 months to live, this money becomes yours while you're alive. So that's the extra. Unless you're selling products like I do with living benefits. If you get with me on the certain carriers that we use, you can build them big cash values, and you can also get them living benefits, which if they had cancer, heart attack, they get into a car accident, they could walk, talk, eat, things like that, that this money becomes theirs. So it's a great way to sell the product, man. Make sure your cash value, by the way, is earning 3% interest. 9 times out of 10, usually final expense is about 3% on the cash value annually. On the flip side, there's another product that's 7.14% interest on the cash value that a lot of people don't use. It's an easy sale. Got low premium rates, high payouts, living benefits, high interest rates, and nobody's using it because they just don't take the time to learn the products, man. And if you guys just take a little bit of time with the carriers or me or whoever else is in your upline, you'll learn a lot about how to sell the product. You understand? Because, when you get into a house, building rapport to the point of trust, to me, isn't really kicking the wind with these people and talking about how he likes golf. I do that too, but I don't spend 15 minutes on this. A lot of people are staring at each other, talking to each other way too damn long. So what I like to do is get in there and get out and explain to them, once they see me put numbers together, they know I know what I'm talking about. You understand? I know I've been in this situation, Mrs. Jones. I've seen what happens. So the other way to go about finding out what they have left is important for you to understand how much premium you're able to charge. Now, I have a list that goes over the electric bill, the mortgage, the grass cutting, the lawn cutting, things that Mrs. Jones is going to have to take care of when he's gone, okay? But you can have that sheet. You can go over that with them, or you can simplify it and say, Mr. and Mrs. Jones, after all your bills are paid, I need an honest answer. After all your bills are paid, are you closer to $500 a month or 1,000? Oh, we're closer to 500. Okay, is it lower than that, or is it about 5,000? I'm sorry, 500. It's about $500. Okay, great. So what I know right now is that, what do you do with that? Does that go into savings, or is that just play money? No, we try to put it in our savings. Okay, so there's 0.25% interest on that. They're earning nothing. So immediately I know to convince them that this is an opportunity not only to invest money, to earn interest on their cash, while it helps Mrs. Jones pay the mortgage. So what she can do is, why does she need to pay the mortgage? Do you know, Robert?
Why does she need to pay the mortgage?
Yes.
Stay in the house.
That's
to stay in the house.
The second option that she has too.
You lost me on that one.
Sell the home for the equity. So if she can't afford to stay there anymore, and a lot of times you will run into this where individuals don't have enough cash flow, he didn't have a 401k, no pension, or just living off the Social Security, she can't even afford to stay there because all she has is $2,000 a month coming in.
Uh-huh.
You know what I mean? So you're buying her time to get the equity. So sometimes showing them what the equity is helps too. Asking them, so you have $1,000 a month, right, coming in? Multiply that by 12 months, that's $12,000. Now they've been living in this house for 10 years. That's $120,000, you know, that they roughly put in, more with interest and stuff like that. Just divide that by 2 and say with inflation, you probably walk away with about $85,000. You could ask them what homes are selling for in the area and things like that to know this number. But Mrs. Jones, you know, you may have enough equity to walk away with anywhere from $60,000 to $85,000. That's your real inheritance, and you want to downsize anyway. You know, so this could be one scenario that you run into. I don't want to confuse you too much, but all I'm saying is that there's more inside a final expense presentation or sale for you to be able to pull more premium out of individuals. Instead of just going in. Now, look, you're going to run into people that are broke too, man, and you're going to have those low sales. But this is what I write on pieces of paper for these individuals to see. I mean, imagine that this is paper, and I just went through 2 sheets, okay? I'm on my 3rd sheet of paper explaining this stuff. You know, I'm going back to somebody that has a different situation now. You could take the broke Mrs. Jones and Mr. Jones, say they're 60, not even collecting Social Security yet, still working, okay? So Mr. Jones is pulling about, he's pulling roughly $4,000 a month in working, and Mrs. Jones has about $3,000 a month left. Now, automatically, how do you get that out of people without prying? Mr. or Mrs. Jones, here's the question to ask, so you don't ask them their income. Do you earn above or below $5,000 a month? You want to know what they make. I earn above, so they're at $7,000, right?
Uh-huh.
Great. So if they say above, you're just trying to narrow it down. So is it closer to 6 or 7? Try to get to it. It's about $7,000. The reason I'm asking this is because you guys aren't eligible for Social Security yet. So what Mrs. Jones is going to miss out on is that $4,000 a month. So all she's going to be living on is $3,000 a month, you know, basically through her income until she's eligible to get your Social Security. Now, eligibility for Social Security, I believe it's either 60 or 61 maybe to get his Social Security. I have to check up on that, but I'm not sure. So I think once she's 60 or 61, if anybody knows that, type it in and tell us what it is. It's 61, then she would collect whatever Social Security he had. Maybe it's $1,500 a month, and then that starts coming into her. You understand? So now, but she has to wait for that. And she may have to wait a year. She's stuck on 3,000. Now what do? We understand this part, but now we have to understand what's going out the door. And the reason you're doing this again is to find out what premium you can use. If you want to sell larger products, you got to know what the hell they have at the end. So, you know, guys, you got about $7,000 a month coming in, okay? After you pay all your bills, I know the mortgage is, what's the mortgage actually? Is it it's $1,200? Okay, so we need down to, we got about 6,800 left. You got car payments, so on and so on and so on. Okay, at the end of this, do you have roughly $1,000 left over? Yes, we do. I know it's affordable now. You know what I mean? It takes the stress off of that. So this situation calls for, if we got two healthy people, it calls for a big policy. You can sell them on big stuff and show them how to earn money. I would show them an IUL. High interest rates, big payouts, living benefits, the whole 9 yards, and teach them. I would teach them how to overfund it. So not only would they pay their premiums and earn 7% interest on that, but they pay extra into their earning 7% interest on that, which is another way to benefit them both at retirement because they have a chunk of change earning 7% interest, which can lead to profit. So say a $50,000 policy to Mrs. Jones. Now, if Mr. Jones dies and he's got this big chunk of change, let's say in 10 years, he's paying $300 a month for this damn thing. I say, Mr. Jones, I say, can you, after you pay for this product, your bills are all paid. Could you survive on just having $700 a month left over and all your bills are paid? Your bills are gone. Your bills are paid and this stuff. Plus you have an investment that helps your wife pay every aspect of the final arrangements, plus the rent or mortgage. Remember, there could be rent or mortgage. And really help her out, get life started until she can receive your Social Security and whatever benefits you get from your job. But, you know, another question, I guess, would be also, Mr. Jones, do you have any retirement put away for Mrs. Jones? What will she receive from that? You know, yeah, I'll just say as a pension in this situation. I always ask, does she get 50% or 100% of that? Because there's a difference. Sometimes it's 50, sometimes it's 100. You know, and say, about what will that bring in? And that bring about $2,000 a month. So she'll get about 1,000. So as long as she's working, she has 3,000, 4,000 bucks. After she's done working, if his Social Security is 1,500, she gets 2,500 bucks a month. That's no good. So you do the math with them and literally show them the mathematics on it, so they can understand what position they're actually going to be in. And that'll help you sell larger premiums, teaching people how to stuff money away. Say, Mr. Jones, if Mrs. Jones is no longer in the picture, you receive the cash value. If you die before her, she receives the big number, the face amount of 50 grand. But I'm going to tell you something, you two together can build this up. And another thing I want to mention is if, God forbid, he had a heart attack, cancer, stroke, needed a heart valve replacement, got into a car accident, head trauma, severe burns, the list goes on and on. If he couldn't talk, walk, eat, the whole 9 yards, the money's his while you're alive still. So you both get $50,000. Actually, you get 95% of it. So that's not a bad hit. But the most important part is teaching them about the value of their money. When they're putting money into something, they do not want to know that it's doing nothing. Now, if you start, this is the big number. This is why they're doing it. They're getting this number to protect something or someone, an event. You have to show them that event and show them on numbers the event, the actual event that's going to happen via the numbers. And if you do that, you're going to sell larger premiums and bigger policies. Now, when you run into broke people, it's very simple. If they are broke, what's that?
Every day for me.
You're knocking on the wrong doors, man. So if they're broke, you know, and Mr. Jones and Mrs. Jones, this is 65, let's say he's 70. well, he's going to go before her by age. It doesn't necessarily mean that, but by age, it looks like he's going to go first. So with that being said, if they're trying, they have no arrangements whatsoever set aside, and affordability comes to 5,000, you know, 7,500 even, and then show 10,000. Show these three options, and then also show them that it fits in their budget. Again, Mr. and Mrs. Jones, at the end of the month when you pay all your bills, you have about $100 to $300 left over. Your bills are all paid on an average. Yeah, we have somewhere in between there. Which one are you closer to? The 300. Well, I know that I could get $100 out of them. I definitely get 50. I might be able to pull the 200 out of them and be safe too. But you're looking at this $150, and that's how far you should be able to push it. So what you're doing is you're knowing the levels of where you could push the premium to. You know, you're no longer pitching this. Here's $30. Here's $20. You're doing it by literal budget and proving to them that they have the money. It's important to prove to them that they have the money, because if you don't show them that they have the money, that's where people call back and say, you know what, I'm not interested, I can't afford it. Because the rep didn't go over the money. He didn't show them nothing. You got to go over numbers, man. I mean, come on, you really do. You got to show them proof. So you got that taken care of. We got Mr. and Mrs. Jones. Let's take another scenario with final expense. You got the 65-year-old male, female here. You got a 65-year-old male, retired, pulling in great income. Mrs. Jones has $2,000 a month in Social Security. Mr. Jones has $3,000 a month, or let's say it's $2,002, which is high, but we're just doing illustrations. So we automatically know the total so far is $4,000. So Mr. Jones, you got to ask it this way. Mr. Jones, God forbid something happens to you. Do you have a mortgage still? Yes, I do. How much is that? $1,000 a month. Great. So I know there's a mortgage in place. So I know this is $3,000 now. So ultimately, I also ask, I say, so Mr. Jones, do you have any life insurance in place? Yes, I have 1, 2, 3 policies. I have one for $10K, one for $5K, and I got an accidental through the bank. That doesn't pay anything, you know? So that's that, or I mean, it's like a low percentage that they're even going to get a shot at that. Yeah, that's worth $100,000. So always people are looking at these big numbers and never really understanding. It never really happens. That's why it's low premium. You know, the companies never really pay them out. But what I want to do is I want to find out, so what are you paying on this, by the way? I'm paying $50 a month on this. How about this one? I'm paying $30 a month on this one. What do you pay on this one? It's just like $3 a month. Okay, great. So now I know I have $83 a month to work with. Why? Because I'm going to ask, how long have you had? I've had this one for over 10 years. I've had this one for over 15 years. I've had this for about 5 years. Bottom line is that I know that there's cash value built up in there. So I'd say to them, look, is there, you know, I have a strategy where you should have done this in the beginning anyway, where you take all your premiums and you put them into one policy. Why do you do that? Because these 3 premiums, 9 times out of 10, is able to get a larger policy if I put it all together. Now remember, they knew you were coming to sell them something else anyway, so the premium is going to be higher. Now here we need to show them the budget again and make sure that they understand why they're doing this. Now, Mr. Jones, if you pass away, Mrs. Jones loses this. So do you have anything else in place that she would receive from you at retirement? Yeah, I have a 401k. Okay, now I know they have a 401k. There's the annuity, okay? So I know that this is about what will, I always say, what will she receive? I don't say how much is in it. What will your wife receive from that, God forbid, when you're demised? It's worth $65,000. Well, I said, you know what? I told you today I was going to show you everything, all your options. So I'm really going to do that. I'm going to get through a couple things with you, and then I want to show you something where we doubled the amount every 10 years. It's been a look back on some companies that we work with. It's been a 10-year look back. It's actually been more like 30, where they've been doubling people's money for the past 30 years, every 10 years. So I want to take a look at that, and it turns in life insurance and taxation is less. You really want to take effect and get out of this annuity, and because you can lose money. You're in no position to lose any money. But let's follow through with the first part, which was your life insurance, which I would like to get paid by using this. So if you allow me to do it on my job, I can just show you an illustration. You guys can make a decision after. I want to show you an illustration. You guys can make a decision after. Okay? That's where you need to present it. So now I'm in a position to get this. How do you get this done? Well, first of all, we want to concentrate on the fact that we still have a life insurance policy to look at. We want to check out what her need is. She has $1,000 a month here that she needs through the mortgage. They have $4,000 a month. They have $3,000 after the mortgage is paid. So guys, at the end of the month, you have about $500 to $1,000 left over every month. Yeah, we have about $1,000 left over. We squander, we pinch our pennies and things like that. So we're closer to this. So would you say that you average about $750 a month? Yes. Well, you're not going to have a problem paying this. Plus, you have $83 and you have cash value built up into these things. So guys, you may have $10,000 built up into this. And it's important that you know that, because if I put all that together, plus get you $10,000, and if I'm able to add it to that and make it $75,000, I'm going to make you guys walk away with a larger income, protect your money. And at the end of this, Mrs. Jones is going to be very, very satisfied, and so will you, sir. So here's what we're going to do. I'm going to take a look at what I can get you, adding this $83 and maybe tack it on a little bit. So if I ask you, can you afford anywhere between $100 and $200 a month? And that would still leave you about $500 a month left over. So I'm going to show you some illustrations that work with that, and then I'm also going to do this. Now, if you don't have a computer or a laptop or something like that, ask them if they have a computer. Contact the carrier. Contact the carrier that does the annuities. Send it to your email. Okay? You tell them the age of the individual and what product you may want to use. And if you don't know what the hell you're talking about, just ask them what your situation is and what's the highest interest earning product. Do they need income? No. They won't need income 9 times out of 10. Because they're able to pull 10% a year out of it anyway. You may want to ask them if they do need income. So at the end of this thing, we got a lot of scribbling here, so I'm going to have to erase some of this stuff so you guys understand. So the bottom line is the big sale here. This is how I walk out with the big sales, guys. So this sale so far is worth $65, $300. You're talking $5,000 on this one deal, maybe more. So what I'm doing is I'm doing an illustration on the annuity. When I do the illustration on the annuity, I'm showing that the $65,000 and possibly adding the $10,000 in cash value from the policies, if it's allowed, could be $75,000. And then inside the illustration, you're going to do a 10-year look back. So that 10-year look back is going to make this a $150,000 deal, right? In 10 years, that's what they'll be at. Okay? It'll show that. It'll show proof. Then it's going to show the interest. 8%, 9% on average. They're showing the averages that these people will earn over the years. So if they bottom out, they lose nothing. If it bottoms out and they get 150, let's say they're at 150,000 in 10 years, and it tanks, everything crumbles in the market, they don't lose a dime. Okay? This is the highest interest earning product out, man. Nobody beats this. There's no higher interest earning product than this. It may be 1 or 2, but to match this, come close to it. But this is the highest interest earning annuity out there. Now, what you want to do too is take the annuity and present them with the fact that this annuity's interest every year pays for your policy, your life and your mortgage, your life insurance policy. So you can afford $200. Because next year you're going to be at about, let's say this is $85,000. You're allowed 10% of that, so you got $8,500. You're not going to take any of that, right? You guys don't need this money right now, right? No. Okay, so what I want you to do is take a piece of that and pay $2,400 a year on this $100,000 policy. You know what I'm saying? Or $50,000 policy, whatever the numbers come to. 200, 300 bucks a month. But the bottom line is not coming out of pocket, plus they're earning more money with their money. Their money's protected. Now, if the downside of the market would hit and they only have 65K, they could lose a substantial amount of money, you know, and they could be in a bad situation for the future. So indexing their money at the time of retirement is a better way to do it than having some stockbroker work it at $65,000. It's not $650,000. It's not $650,000. It's $65,000. You know what I mean? So it's a low number, and you guys want to protect it. At the end of the situation, you got the paperwork. You got to learn how to write the annuities and things like that, which we will train on eventually here. You can call the carriers up right in the house to learn how to write this. So you say, I'm new. I want to learn how to write this. I'm new. What do I do? So, you know, annuities aren't that easy, but they do pay very well. You know, it can get you a jump start for all of you out there, everybody. So, you know, any other questions that you're running into? Anybody else have any questions? You can mute yourself out and ask anything you want. Anybody have any questions on FB or Facebook? Any questions, guys? Hold on one second. All right. So what we want to go over, we got in-home sales presentations. We need our lead flow. Without the lead flow, it's crumble, man. You can't do it. You just can't do it. You got to find a way to get the lead flow, you know? Once you get a lead flow of 20, 30, 40 leads a week, 60, 100, boom, you're off to the races. You can't lose. Hi, Mrs. Jones. I'm doing a follow-up call to the call that you received yesterday on that final expense information. I'm the rep that handles that area. I'll be in that area at 2 p.m. tomorrow. Will you and Mr. Jones be available? Yes, no, whatever they say. If they say no, I'll tell you what, then I'm there. I work till 9 p.m. that day. I could see you at 6 or 7 p.m. Does that work better for you? Yes. Okay, great. Now, I'm writing this down. Can you do the same? I'm going to confirm your address. And what time did we say again? I have them repeat it back. So I know after they wrote it down, I get them to tell me what time we you know, what he said. I'm sorry, I'm very busy. I don't remember the time. Okay, well, yeah, I'll see you again at 7 p.m. Tomorrow with you and Mr. Jones, okay? All right, great. I'll see you tomorrow at 7 p.m. Good night. So I repeated it over and over, plus I wrote it down, and so did they, you know? So that's how you lock in a lead and make sure that both individuals are there. You're not doing one-leggers. Now, if nobody has anybody like a husband or wife, next step is to make sure that you ask, is there anybody that helps you make important decisions? Anybody that helps you make important decisions? Yes, no? Okay, well, how about the beneficiary? Is the beneficiary around? Because, you know, I don't want somebody to go into a house and one of my reps or yourself or any of you on here, even on Facebook, and the person says, I have to ask my daughter, which would have been the beneficiary. So you missed it because you asked, if no husband there, there's nobody that helps you make important decisions, but there was the beneficiary, or vice versa, the beneficiary or the person that helps them make important decisions, either one. Very important to say, though. When you're selling final expense, it's about lead flow. It's literally about lead flow. You know what I mean? Once you have a steady lead flow, you're going to burn up the phones. And then it's about the phone. And it's about getting around objections. You know, what are some objections you may get over the phone, Robert? Do you remember any?
I didn't fill one out, or I'm not going to be available, and they give you plenty of excuses that they're not going to be available. I'm doing something this day, doing something that day. Or they just flat out.
Talk about I didn't fill one out. Well, I'll tell you what, I have a recording of it. I can play it for you right now to refresh your memory. And you also said that your favorite color was blue. And I got you. I promise you I don't cold call anybody. So How about I play the recording for you so you can hear your own voice? And if you're in that situation where you can do that in front of your computer, do that. If not, you just state to them, look, I'm already in the area. This is very important information through the state of Florida. Things are changing. You know, funerals are getting more costly. I'm going to teach you how to put money away like a savings account, but earn interest on your money. This is going to be a fantastic solution. Now, guess what? There's no obligation. You don't have to do anything. And I'm already down the street from you that day. So I'll tell you what, I'll just drop the information off. I'll see you at 2 p.m. How's that sound? That's it. Just go right back into the appointment setting. Give them some kind of BS stuff, you know. And where was the other one you said? I didn't fill it out.
It was, you didn't fill it out in. They always got something to do.
Yeah, you know what? I'm pretty
busy
busy myself, Mrs. Jones, too. But I'll tell you how important is this. Is that the fact is that we want to use your agent help today. And I'm also I'm not the norm of the reps. I actually teach people how to earn money from this. You know, instead of putting money in a savings account, I'm showing people how to earn interest on their cash while they're leaving a substantial amount of money behind. This isn't going to take any food off the table. Here's the great part. I work till midnight tonight and tomorrow. So I'll tell you what, how about I meet you at 9 p.m. tomorrow at your house? Would that help you because you don't have the time? Maybe I just meet you at 9 p.m. I know that sounds goofy to say, but they're going to know that you're serious. And then they're going to come up with, no, that's way too late. Why don't we just meet at 7? You know what I mean?
Okay. And then
stretch your time out. I work till midnight. You know what I'm saying?
Yeah. And the most popular one, I have all the life insurance I can handle.
You know what? That's fantastic. I'm going to tell you something right now. One of the things that was out there back in the day, are your life insurance policies older? Are they new? Are they the new kind of policies, or are they the old style? So there's a difference in today's era, and you need to know that. The old types are cashing out. Like the reps didn't explain how the products work. Now, does your product say flexible universal life or universal life, or is it term? Because if it's term, you obviously know it's going to terminate. Now, what I could do is, the better thing to do is this, Mrs. Jones, is to compound all those premiums into one and get one large policy. Instead of having all those policies, you take the premiums and you combine them into one, and you earn a lot more interest on your money, and you get a larger policy. Then you're dealing with one company, not several, which can be difficult for your family. So, you know, what I'm going to do is it's just information for now. If you like what I have to offer, you know, God forbid that you don't, and I walk out the door. But I'll tell you, this is the way to go. The way I teach people how to do this, I've been doing this for a long time. I'm going to tell you, I'll be out in that area at 2 p.m. tomorrow. I can drop this information off. We'll go over it together and we'll see which options are best for you, okay? So I'll see you tomorrow at 2 p.m. That's it. It works, man. You know,
okay.
You're on the phone, everybody. You gotta be strong, man. You know, get hung up on, for God's sakes. You know, might as well go for it all, man. You know what I mean? Get hung up on.
We got certain one time.
Yeah, there you go. Great job. You know, on your door, man. Great job. You know. So, any questions on Facebook? You can just type it in the comment section. If you guys really want to learn, start asking some questions, because the system works. I mean, it's been proven to work. It works with all the reps. It works with myself. It works with Alyssa. It works. The only thing that you guys aren't doing is you guys aren't studying the fact that you were trained by somebody and you find, oh, I'm making $20,000 a week. I'm great. You know what I mean? That's great and everything in this industry. But when you get the ability to start selling annuities every week, you're finding money and you know what to do with it now. So you're running into 1-5 annuities a week, which tax on an extra, $1,000 to $100,000. We just recently had a gentleman in our organization sell a $1.2 million policy, which yanked him this. So one deal he made $100,000 on.
Damn.
You did?
Yeah, that's pretty good there.
But you know what? You have to learn how to get it out of people. You know what I mean?
Yeah.
Learn how to find the money, guys. Find the money. Where's the money at? You guys know where money is? I mean, it's in the bank. It's in the 401k, 403b, IRAs, cash value in policies. It's everywhere. It's literally everywhere. What else can we put up here? It's got banks, 401ks, 403bs, IRAs, cash value, and it's got IULs that are falling apart because of the cost of, the cost of insurance is what I'm looking for. Cost of insurance inside the IUL wipes that out, so you can replace that product and put it into an annuity. You can also remember to get the new product, the new annuities paid for. Hey guys, give me 1 second. My YouTube page went out. I need to put the battery in. Give me 1 second here. We'll plug it in. So, all right, give me a second. I'll plug this sucker in and then get people back on from Facebook here. Still on. So, what else do we have? Who else is on there? Let's see. People that leave. Anybody that I know, like from 706-255-3485, is there anything that you're doing in the field that we could help with, or any ideas that you could give the team to help?
Oh, hey, Jason. How you doing? It's John.
Oh, hey, John.
Do you ever talk about the American Amicable free accident policy?
I think that's something that we should talk about, to be honest with you. Yeah. What that does, guys, is that allows you to get into homes using an automatic insurance product that is worth $5,000, right, John?
Absolutely. And I was just going to share with you that I ran into one of their agents one time. The guy was almost a strictly final expense guy, and he was pulling in about $300K a year. And he was now he got into trouble because he started to write other policies other than American Amicable, and they started seeing all those accident policies coming in. Well, you got to write some American Amicable to keep it. I mean, there's no question.
Is that, guys, you have the ability to use what he's talking about is a company called American Amicable, which gives you $5,000 in coverage to give to other individuals. So you were talking about referrals, brother, and this is the way you get it done, man.
Yeah, in fact, you can door knock with it, and that's the reason I was listening to Robert. I mean, you talk about door knocking with something that to a senior that they, and I wouldn't give them the $5,000, I would give them the $1,000. And when you sit down with them, and I would just say, and this was his philosophy: whether they buy from him or not, they're going to give him 5 referrals so that they can get that $5,000 accident policy.
So,
and I asked him,
to get that, John, I think you have to have a special amount of numbers in, or do they let you buy this?
Did they let you buy the accident policy?
Yeah, I thought back in the day I was told that you can buy this off of them. You can pay for this, the sheets of paper and things like that, or you got to have a certain amount of money through them for them to open the doors up for us.
Right, and I'm not exactly sure what those numbers are. I know that when he was at such a level, he could just give them the $5,000, but he never did. He only gave them $1,000 until they gave him 4 referrals. And I asked him how many leads he had that he hadn't worked. And this was about halfway through the year, and he had over 300 people to see. He almost never bought a lead. because he was literally running from one friend to another, just getting more and more. And it was really interesting. I went up to see his training in Hickory, North Carolina. It was a really good program.
Robert, are you with American Amicable?
Yes.
Okay. Contact them Monday and ask how you can be a part of that program, that referral program.
Okay.
Okay?
Right.
Just get to know it. This is something we used to use a while ago, John, but now I'm not sure how much money you have to be putting through to do this. So I don't know. It's interesting to me, but Hank, don't do shit like that, man. I gotta erase your shit then, man. You know what I'm saying? We're going to talk to you after this too. So sorry about that, guys. Oh my video going. Sorry, guys. Some idiot that I know put up that don't get involved with this. This is a Ponzi scheme. Like, it ain't put laugh out loud. Like he's probably drunk off his ass, so I just unfriended him. And it's just ridiculous what people do out there today. So anyway, long story short, first of all, I talk about anything but, you know, these numbers and try to help people. So this kid, I gotta really give some words to. But long story short, listen, that's a great strategy right there to work on, and that'll put your numbers on. Look, if you're out there beating on doors anyway, you might as well get involved with this kind of situation where American Amicable will allow you that, you know, and that would be great for all of you, in fact, everybody that's involved, you know. So, the process, I get a little nervous with that situation when you get to the door. You know, what are you prepared with mentally? What's your game plan in the house, Robert? And a lot of us don't really understand the game plan, but when you have leads coming in, you can understand their situation, because when you get good on a lead, you can say, hey, Mrs. Jones, we got get the date set. And by the way, do you have any health issues currently? Do you have any diabetes, or have you had cancer in the past 4 years? You know, are you CPAD? Things like that. You can list this. And then when you walk into the home, you know what to use. You know, it's a better scenario for you to get an idea of what to use. Instead of having to sit down with them, go over that stuff, and not know what the hell to use, get good on the phone so you understand what to use inside the home. And that's where it's important, where I don't know what the hell it is. I guess my battery's dead in my fire thing. That's where I come up with the big numbers for the IULs, and I will do the illustration before I go into a home. And I always ask, you know, are you closer to the age? So like hypothetically, if they're 50, are you closer to 50 or 51? Because the company wants the closest to the age. And do you happen to have any health issues currently? Like your heart, is your heart okay? Is your lungs, things like that? Yeah, sure. Great. You know, and then you can just do this policy. The reason for this, when you walk in the door with a packet, tangible packet that they can hold, you flip this bad boy open right to the page that has all the cash value in it. Let me see if I got one. Oh, I got one right here. Okay, check this out. So you have cash value sheet here. This is a 71-year-old female. So, like hypothetically, she's paying $108 a month, which puts about $8,000 in her account, and the damn thing's worth $25,000. So just in 10 years, she's almost halfway to what the policy's worth. The reason that's good is, God forbid, you know, or God bless her if she lives any longer, because, you know, at age 117, it's worth like 75,000, so on and so on, and it goes up and up and up, you know. So that's the pretty part of the puzzle that you can show them. But on top of that, inside this little puzzle is the living benefits. So when you flip this packet open, you're able to show them their living benefits. You know, they have living benefit options available on Candace Love at 73. Terminal illness, she could get a $17,000 92 lump sum immediately. Chronic illness benefit $296 per month, so she get a monthly payout of this. And then critical illness benefits $15,958 lump sum. Critical injury benefit $15,000. You know what I mean? This isn't it though. There's a packet that comes along with this with a lot more details on the living benefits and how you present them. So what I'm working on here is what I'm trying to do is mentally make sure that people understand when they're spending money, when they spend $1 with us, that it's earning money. You know what I mean? I don't want them to think that this is wasted. Look, because you always have access to the earned money or the death benefit, you know, 50K, 25K. One way or the other, Mr. and Mrs. Jones, somebody's getting paid. Mr. Jones, if your wife goes before you, you're just going to take out what's in here. So in 10 years, you got about $7,000 to $10,000 built up, depending on how it performs. You know, and Mrs. Jones, you have always the $25,000 starting tomorrow, you know. So this is a really good way of presenting it, along with the fact it comes with living benefits. So, you know, does cancer run in your family, guys, or does heart disease, any heart issues? Yeah, my father's had heart issues. My mother's had cancer. Well, look, this is a way to get around that. I had one guy that all 4 of his brothers had cancer. 3 of them died of it. He bought this just to avoid cancer. So if he had gotten cancer internally, he would have this money because he's still working at age 62, you know what I'm saying? So he bought it for that reason. Not just, he didn't buy it for the, he bought an annuity off me for 80 grand. So he had that, and that pays for the policy. So it's a no-brainer. You know what I mean? It doesn't come out of his pocket. I mean, it's very, very simple, you know. So, John, I got those new leads coming in this week. I got the first one. We didn't set it because he has to go out, but the leads, the new leads for final expense are absolutely awesome. I mean, how can you not want that lead? You got people who've been living in the house for 2 to 5 years. Equals equity to protect in the home. And they know their bills. Now, the usual mortgage protection lead, you walk in, Mr. and Mrs. Jones have no idea what they're paying. They just put a lump sum down on a home. They refinance, pay all their bills. Now they're broke. So whatever the case may be, but this scenario is better because you know they got equity in the home now. And Mrs. Jones, if he passes away, you know, wants to walk away with that, or she wants to pay the back end of the house off. You know, if he makes it to the year 20, give him enough money to pay that off, or buy her time to sell. I'm going to tell you right now, in the mortgage protection industry, this is what you're doing. 9 times out of 10, that's what I walk into. They want to. They know they have to be forced out by numbers that we put together, and they already knew sometimes that they don't. Or second to that is that they understand that they have to sell because they want the equity and they don't want to stay in the house anyway. So all they want is enough time, because the biggest policy that he's going to leave behind isn't in life insurance, it's in the home. That's the inheritance. That's what Mrs. Jones or the kids will. Now, Mr. and Mrs. Jones, what would happen if, God forbid, both you went together? Who gets it then? Start hitting them here. Get them visually understanding that that could happen too. They're not seeing everything, man. Believe me, they're as busy as we are. You're the guy. You walk in as the professional and you get their face into this and understanding and get their mind and heart available. If they cry, they buy. Remember that. Get Mrs. Jones crying about this scenario, she's going to buy, man. Doesn't happen often, but it does, you know. But if you run into a scenario like where somebody has the right amount of money, and in this scenario, they've been living in the house. You know that they can pay the bills. They got money coming in. They got equity built up. They probably have something put away for the side, a lot of these. And the special part about these leads is that they all want to set with you. I tell you, really, with mortgage protection, there's no problem getting in a house. The downside of it is it's more an expensive piece of marketing tool, but it's worth every dime of it, really is. Let me ask you a question. If I told you, if you gave me $50, I will give you $5,000 back. I will give you $1,500 back. I will give you $500 back. Would you do it?
I'll get at you now.
Right. Makes sense, man. So at the end of the day, you have the ability to make tens of thousands of dollars a week sitting with people that need this done because they can't afford to stay there 9 times out of 10. What you're doing is showing them, you're painting the picture of the reality that's going to happen. And it's not if, it's when. Make them understand that. Not if it happens, it's when, man. So, a lot of people don't understand that. That Social Security is a big tip to tap into. And that beginning part where you know how you have a mortgage, or even if final expense, they have rent and they still need to stay there. But if they have a mortgage in this new lead system, we know they have a mortgage. It's hypothetically, for the numbers, it's $1,000 a month. And this individual's been there 5 years. I multiply that by 12 equals $12,000 a year times 5. It's 10, 60. So $60,000 is about $30,000 in equity or more in that home in 5 years. That's what we're trying to protect. Now, on the flip side, do not forget to cover the back end too if they're young people. And when they're young, it's important to know that I use the IUL system when they're young to teach them to overfund it. And I literally talk to them about it. I say, hey, did you do anything with it this month? Can you afford to do it? But they're excited that they have another way to put money away because they understand that the 401k may dive in the market. At the end of 30 years, they may walk away with 200 grand, but in 30 years, $200,000 will be worth 150 grand. So you have to teach them about inflation. Be worried about it. And funeral homes are going up. Supposedly they go up 4% a year. Inflation goes up 4% a year. It's crazy, but this is the things you need to tell them. And the biggest sales point that I get into is the fact that Mr. Jones has $1,500 a month in Social Security, but she has to wait. They don't even realize that. Some people don't even know that they get that. And then she's living on $750 a month for worst case scenario today, 12 months. Later on, 30, 20 years from now, it might be 24 months. Who knows? Oh, and for the younger people in play, Social Security might not be there at all. It could happen. So they need another avenue, and this IUL could be their way out, overfunding it and taking advantage of the money that they will earn on the interest. Plus, they have protected his wife. On younger people, are fun to work with. They just need to be explained. 20-year-olds don't really get it. I would have back when I was 20. But these people don't, usually 9 times out of 10. Anywhere from 30 and above really works well with this, and 40 and 50. For the older people, I just let them know that the option's there. It's fun. But like I said, paint that picture in their mind. Make sure that the reality of death is known. We can't defeat that. Don't be stupid and say you can be buried in the backyard or a hefty bag. Just doesn't happen. And be sure to understand that you are there to do the job that they asked you to do, which was, you asked me to come here to give you options for final arrangements, right? Yes, well, that's what I'm doing. Let me do my job and I can get you, paint this picture. Some people are tough. Oh, just give me a number. I will. I just want to show you the value. I want to show you everything that you're getting, Mr. Jones. So please, give me 5 minutes. Let me really show you what you can be into, what you can accomplish with this, what it can do for your wife, what it can do for you when you're living. It's got a lot of little angles to it, but I can get through it very quickly. Just give me 5 or 10 minutes. So, if you get the tough guy routine, just control them with a great attitude, by the fact that you are the expert in this field. Final expense is a great market. People are earning millions of dollars doing that final expense bid, mortgage protection compared to this, average app, $80 to 150. Average app, 100 to 300. So there is a difference, in getting into mortgage protection. And if you get into mortgage protection, the other thing that you're going to lead yourself into is a lot more of the retirement plan products. You got the 401ks, you got the 403bs, you got the list goes on. You got the IRAs. A lot of these, if you find an IRA, it's just like nothing. Bottom line, it probably 9 times didn't do anything with it. CDs. I just did one that was in a CD at point. It was a ridiculous number. It was like I think it was 0.25. Honestly, that's what she was earning, 0.25%. And she was pissed off about that, so I showed her 8%. It's like makes sense, right? So I also want to teach you that you can take an annuity to an annuity. If you find a variable annuity, you know that's up, down type situation, that you've got to get them out of that and just tell them it's the same thing, but no downsides. No downside participation, no fees, and you're going to earn a hell of a lot more. A variable annuity, 9 times out of 10, next to an indexed annuity in the long stretch, the indexed annuity usually out-battles it. I put them next to each other. I put enough next to each other over the years and said, look, this is what you would have done in 10 years compared to what this has done in 10 years. The proof's in the pudding. Remember, the illustrations are there, and you have the illustration tangible for Mrs. Jones to hold in her hand to actually present to the client and look through it, go to the 10-year look back, go to the non-guaranteed section of the sheets, and show them what the potential is. And people hit me up on Facebook and LinkedIn saying, there's nothing out there like that. John, I have a theme, you know the products out there, they do this, that you show, the proof's in the pudding. It's last year, if somebody had $100,000 or 10 years ago, 10 years goes by with a bonus, they'd probably be at $220,000 in 10 years. That's the facts. That's the facts. So everybody out there, stop texting me that's not true. It is true. Okay? I don't want to hear any more about that. If you want to get involved with it, get involved with it, man. Sales process 101. Have a great attitude. Phones are important. The phone is the psychological battle that most people don't win, is the phones. Now, the phone can be a crippling scenario. You got to love that. That's a Jedi sword, man. Get on that bad boy. Read a good book. Listen to some better music. Put a vision board together. When did we stop putting vision boards together? It was big back in the 90s or at least when the secret came out. So put the vision board together. Get some books on your shelves, Battle of the Mind by Joyce Meyer, Pause, Living Beyond. The Bible is a great one too. Stop being obsessed. Awaken the Giant Within with Tony Robbins, great book. And I'll tell you the best book to read today for financial people is Tony Robbins' new book, which I've read, is unbelievable. The 50 guys that never lost a dime for their clients, the billionaires that started from scratch, nothing, nobody gave them a dime, they started from zero, he interviewed. And each one of them that made money during all the downside market potentials were because they were indexing. Exactly. The book is all about indexing. It's about indexed annuities over and over again. This is what Tony Robbins is now teaching people, and he has 50 of the world's most talented stockbrokers in the world teaching you this stuff. It's amazing. It's absolutely crazy, because this is proof. When you read it, you'll understand why index annuities are so important to people's futures, because the downsides are coming again. People always want to participate in this. This is what they're looking for. They're not looking for this. They're looking for this, and hoping that this makes up for this and this. But it never does. The streamline across the board is 3 to 4% on an average 401k look. Maybe 6. But at the end of the day, that's wrong, because if they never lost a dime and they were at a 6% indexed annuity with no fees, remember, when we have this, we have 2% fees 9 times out of 10. So if Mrs. Jones earns 4, she actually earns 2%. How do you get proof for this? You contact the stock brokerage, not the broker. Call the stock brokerage, tell them the account number, and have them explain the fees to Mrs. Jones or Mr. Jones and the downsides. That's it. And once they hear the fees, how somebody can be charging $900 a month in fees. My mother had a $140,000 annuity, worked 33 years, would have been worth $1.3 million if she did it the right way, which would have been an indexed annuity, because I did the math on it. And all her losses, and she was being charged $900 a month in fees, and she never knew it. Absolutely absurd, ridiculous. So what you need to do is get in the home and take control. You need to really focus on the control that's in the house. You need to have Mr. and Mrs. Jones telling you that they love everything you're saying. When I'm done with a presentation, I really like what you just did. I love how you just presented this to me. I can't believe these are my options on good times. You got to think about it here and there, but if I'm talking to somebody and they got $500,000 put away and they don't know what the hell to do and they just met me, you think for 1 second they're going to check up on me, they're going to check up on the company, things like that. They got to make moves like that. These are tough to sell. Number one, you're always going to get the stockbroker involved. Now, the best thing to do is if they tell you you're going to get the stockbroker involved, you get on the phone at that point with the client, because these people are good. They sell, man. These people are great. They are going to convince them to stay. They're going to rip an annuity apart. They're going to talk about the longevity of how long they don't have to touch the money. They'll never tell them that they get 10% a year out of it, but they'll just tell them you can't touch it for 9 years. Or 7 years, or 10. There's penalties if you do. The upside of this is, if I explain it to you, I had one guy that I did sell for $500,000. I sold $1.2 million in annuities in one day. Actually, I had the president of the company come in to help us, and we sold 3 annuities in one day. I set 1, 2, 3 up in one day. Never even heard of anybody doing that, but I did it. 1, 2, 3. Long story short, big money. We split it. The guy with the $500,000, we were able to get him a 10% bonus. So he's at $550,000. And guess what? The month before that, the market stole $50,000 on him. He told me that, and guess what I said to him? I said, how would you like if I could get you that $50,000 today? I can get you that $50,000 again. I can put it in your pocket right now. He loved it. Took advantage of it. Unfortunately, he died recently after that. His kids got it, and they wanted to split it. So they split it, and they bought annuities. So they got 2 annuities, and that made another sale, you know what I mean? So they inherited it as life insurance then, as a benefit. And it was more. It was like $570,000 or something like that. So they really made out good. So they got 2 annuities themselves, which helped my situation, of course. They believed in what their father wanted for them. And long story short, you run into that sometimes. But I was there 3 times. One lady, I was there at her house 8 times. It's not easy, guys. I promise you that. Nothing is, for the big money. But if you hang in there and you do the struggles and you perform at a high level and you're constantly active and you're constantly working on the phone, taking a break occasionally, do what you love to do too, spending time with family. But I told myself, you know what, 2018, I'm going to rip it up, man. I'm not only going to out-train every other corporation and company out there, but I'm going to make sure people are actually making numbers. If this doesn't make sense to you, I need to understand why. You know, if you're not getting into the house, then that's why you will never understand this. For people that have been in the house, they can relate to what I'm talking about. They know that this stuff can be pulled off. You can walk into somebody's house and protect a few things. Mortgage protection, what do we pro? We protect the selling of the home. We also protect the back end. That means paying off the back end early. It could be two things that happen. If they don't sell in the beginning and they ride it out and they're at the 20th year, they could have enough cash value built up that they could pay the house off with that. Have no more need, no more mortgage, okay? That's one way to look at it. Now, number two, they can pay the back off due to death. So somebody buys the bucket in 20, 25 years, a couple $1,000 so they could pay the house off that way, live there scot-free, and that's it, you know, pay the electric bill. And then the third way is to get the equity, which is most likely what most people do. They get the equity, they pull 100 grand out in 10 years, 200 grand out, 20 years, so on and so on. And that's what they walk away with to retire, and they're 65, 75, 85 years old sometimes, and it happens to younger people too. But, you know, just knowing this stuff is important, you know, because you know now what you're supposed to do. What you're protecting is important. A lot of people nobody taught me how to do this. I taught myself mortgage protection, by the way. I swear to you, nobody gave me any advice on it whatsoever. I was told to use term, and I said, well, term's going out of style anyway. A lot of companies aren't going to even use it in the near future, so it might not be an option. But the only way I would do term is if I was able to get ROP on the individual and make sure they get all the money back at the end. Also, they could take that cash and pay the back end off. There's a lot of benefits that come with certain companies with ROP. I'm not even sure. I haven't sold one in so long. I don't know who the hell has them anymore. But that's why I hire people to do that for me, to know that stuff. But if you guys ever get into a jam and you're in a home, use GroupMe. Text GroupMe and say, hey, look, I'm in a jam. I'm in a house. What 57-year-old smoker has diabetes? What's the best product? Somebody's going to hit you back. Best thing to do is be a professional, get on the phone with the carrier, and say, hey, Mr. Jones, I just need a minute. I'm going to see how many more discounts I can get you. Now, you can also do that when you call me and you're jammed up. You know, there's a lot of ways out. With Rob, we just got to get you in the house, man, and make it work for you, brother. I know I can train you. I know I can make you great. So it's very important that you do that. Any questions on Facebook? Anybody out there that wants to ask a question, please go ahead and do so. If you're watching this, great. If you're not, sorry that you missed it. But look, what we want to do, last thing I'm going to give you is we want to also build an organization, okay? I'm trying to be the first organization that really performs on a high level of training. The problem with this is that nobody seems to want to come to it often, and the people that do come to it often seem to be getting smarter and smarter. I notice because when I talk to people, I understand that they're listening and they understand language. Now, when you get into mortgage protection or final expense and annuities and things like that, you have a lot of options to earn. But you also have the option to earn off other people's pens too. Why not give this? Don't give this out to anybody. Really, you can bring people in new, but it's always best when you bring people in after you've proven that it works. You change your address. Why? Because I'm making $250,000 a year. My phone number changed, my address, my zip code, things like that. When you're able to prove that it works, you're able to get people involved better, you know, help their life change. The simple part about life insurance is this. Somebody has to die. We know we need to cover that part. The other part is earning. make sure you find a way to show them that they're earning money while they're performing in these products. You know, always do this. Always show the living benefits. Be very heavy on this and cash value. Be heavy on these two and the fact that this is going to happen one way or the other. Mr. Jones or Mrs. Jones is going to get money. How? Mr. Jones receives the cash value, she dies, he dies, Mrs. Jones receives the death benefit. It's real simple. You know, it doesn't have to be difficult to show this to them. But remember, write it down. I actually have a PowerPoint that I can get to people. But however, it's designed mostly for mortgage protection. But I think the points in it can be used for anything. I'm also on chapter 5 of the book I'm writing. I don't know what I'm going to call it yet. But it really, when I read it, it has a lot to do with what we're running into. And it has scripts in it. And it has things you're always going to walk into. And it has every scenario. And it has everything that you should do in those scenarios. So when I'm done with that, everybody can hopefully get a copy of it. And I'm talking to somebody that built one of the largest mortgage protection companies in the world. And he put a few books out, so he's helping me do the same by talking to him. Try to work with him on that. Any more questions? Anybody have any questions? John, do you have any questions?
No, I'm fine.
So what we need to do is really get people to join the group, get them trained. And all you people on Facebook and other organizations, that's fine. You can use this training techniques, I'm fine with that. But at the end of the day, if you want better resources, you want more of the training, because I'm only giving a little bit to you here. If you want more, come ask me about the organization. At least let me talk about what I can offer to you. And everybody's about comp level this, comp level that. They give 140% comp level to somebody, and they're still not earning $10,000 a week. I can give somebody 100% contract level and have them earning $10,000 a week. You know, but I don't. I give higher contract levels out. But what I'm saying is without the proper organization and training, you won't make it. But anybody that's near me in Florida or has a group and wants me to come in and do a boot camp training for them for a weekend, I would love to spend the weekend with you, training you, getting everybody organized, and doing this over and over again so you understand how I can pull this apart more and I can get more detailed about what happens in these homes. I'm giving you literally what happens in the house. It's no bullshit what I'm telling you guys. This is real stuff that happens. I'm still in the field. I'm making sure to stay in the field so I can give you all the information that you need, you know? I think that if I were to continue training, it's a little bit a long one, but if we could continue, the only thing I would tell you to do is for Robert, you need to get these lead orders in. So I want you to text Alyssa tomorrow, and I want you to ask her about the cheaper leads. Or if you have access to the numbers she'll give you for the B leads, I'm going to have you actually call the guy and get to know these lead order things, okay? I want to get you some cheap leads. I want you to buy them out. If they're 50 cents a piece, I want you to have you should have a lot of them. You know what I'm saying? Now, what you're going to run into is they have it already. That was a year ago. Okay, you know what? It's fine. I'm sorry. We get 300 of these a week. It takes a while for us to get there. We do apologize. Maybe one of our older reps left the industry, left us behind. But I'll tell you what, I'm on the phone and I'm already in the area tomorrow. And we'll go over a great script for you to use. But I'll tell you what, Mrs. Jones, this is powerful. This is the state of wherever you're at, North Carolina, advises us to get this information out to you. They really want you to get this taken care of. And what we can do is we can just look at your options. And remember, you filled this out a year ago, but if it's still not taken care of, it doesn't make any sense for me not to come and show you this information. So when we get there, I'm down the road from you that day anyway. I'll drop the information off, and that'll be it. You'll have it. and you can go over it, and we can discuss the future from there. Now, if they already have it, that's a good thing. I'm going to tell you why. Because you can get in there and replace these things. Mrs. Jones, that's great that you already have, but I'm going to tell you, a lot of young kids are running around here selling this for, commissional reasons, and I've been doing this a long time. And I'm going to tell you what I do is I usually 9 times out of 10, I'm able to double the amount that you're leaving behind for half the price you're paying right now. So I'm actually leaving more money behind, and you're paying less. Plus, you're earning more in interest in your cash value. So all it is for now is information. It's not going to cost you a dime to see me. So does 2 p.m. work tomorrow? Again, make sure that you get into the habit of getting right back into the appointment, the time and the date. After you say something like, Mrs. Jones, does that work for you? Don't leave that spot open. That means you didn't say the time and date yet. Or, Mrs. Jones, is Mr. Jones going to be there? I would have said, hey, is Mr. Jones and you going to be there at 2 p.m. tomorrow? Take a few minutes, get this information in your hands, and everybody's happy. How's that work for you? Does that work for you? Okay, wonderful. I'll see you tomorrow at 2 p.m. Hey, by the way, we're going to write this down. I'm writing this down in my notes, in my book. Can you do the same? Make sure Mr. Jones knows about it. That way we're all on the same page. And I'll see you tomorrow again at 2 p.m. And I repeat it, and I repeat it, and I repeat it. And I get them to repeat it. Solid appointments, very important. Lead flow. Why are people afraid of leads? Why'd you get into this business? Did you think everybody was just going to hand you the business and say, hey, I see that my outlay made 100 grand, 200, 300, $1 million a year. Did you not think that there was going to be investment, or did you think that you're going to be able to get in here because people lied to you and you had $300 and you thought that 300 was going to take care of your life and you could keep going from that point? That's wrong to do to people. And that's what happened to this industry a lot. Just because somebody wanted to recruit you, they started you out as a low contract level, plus they give you leads that are $37 a month. And that's wrong. No training whatsoever. Leads that are costly, no product knowledge, and go in a house and sell. How in the hell are you supposed to pull that off? I've been there. I know what it's like. I'm a salesman, so I tried to pull something off. I'd call the home office and say, look, what do I give this one? Here's the situation. Sell it for me. You know what I mean? So that's how you get started. And, don't worry about, if you're new, you just train like hell. You got my YouTube page to go to. You got Innovative's University. You got YouTube. You got a smart upline. Not thousands of you are with the incorrect upline. You got some young kid that made a couple bucks who hired you. He got a low contract level. You got something going on, and he doesn't even know what's going on, and you're crumbled by the fact that he doesn't know what he's doing. So you have to find, if you're new to this business, and you got to find the right person to work with in a right organization. You got to find great lead flow. Leads. Now, since we're innovating the whole mortgage protection thing, everybody will start doing it eventually. But if you want to get in on this new mortgage protection lead and start making tens of thousands of dollars a week by the fact that you're going to find the indexed annuity products, you're going to sell higher premiums, you're going to be able to get referrals. Referrals with this, if you get that American Amicable referral process thing, where you're able to get somebody $1,000 for seeing them or $5,000 and they pay nothing for it, it's free life insurance. It's free. Who's going to say no to that? You know what I mean? So, John, thank you for bringing that to the table, because I forgot about that. And it's absolutely incredible that you're able to do that. So I hope all this helps. I don't have very much more to say tonight, guys. I just wanted to get something in because you had requested it, Robert. I hope it all helped, So door knocking, make sure you put the sticker up, you sign missed delivery on it. When they contact you back, do not call them. Go right to the house. That's it. Right to the house. Say, hey, look, I left the sticker up on here. Your neighbors had requested some information on final expense. I thought, I'd come down the block here and beat on everybody's door and see, how I could help them with some final expense arrangements and some prices on how to take care of this. So would you have time today or would tomorrow work? Don't be worried about asking, just ask. Would today work better or will tomorrow work better for you? Get the appointment.
Mm-hmm.
That way, it leads more away from the fact that they may say no than saying, oh, you know what the hell? I'm going to see what the hell this guy has to offer. And I can't afford it. You know what? We're not going to take any food off the table, I promise you. This is like 10 cents, 20 cents a day. It will not take any food off, but it will help your family at the time of need. And it's designed to leave you money while you're still alive, too. So it works in both ways. It's not just a death benefit, if I can get you the right product, So let's take a look at it. Anybody on Facebook have any questions? Like I said, you can ask in the comment section on, anything that you want. I've been through it all, so if it's dialing or phone scripts or in-home presentation or products or whatever you need to know. But that's about it for tonight, guys. I think that we've gone through a lot, and I appreciate you guys all being here. All this is recorded anyway, so if you missed it, good luck seeing it on YouTube then, I guess. Robert, do you have any more questions, though, before I go?
Yeah. Mortgage protection.
Yep.
When you go in with that, my question is, say somebody's got a house and it's $250,000, the mortgage $250,000. What's the process?
All right, let me go over that. Let me see something.
Is the amount of coverage they're going to get is $250,000, or what they have left to pay?
Hold on a second, buddy. So you have somebody who has a mortgage for $250,000, right?
Right.
Right. Now, the first step is brand new.
Yeah.
All right. So first of all, we want to know what they put down on it. We put $20,000 into it. There's equity already built up in the home. All right, so that's important to know. Now, number two is you want to know the monthly. $1,000 a month. How long? 30 years. So 30-year mortgage for $1,000 a month. Down's $20,000. Got $250,000 to go. All good situation for their future. It's earning money. Interest on this is being gained. Your game is to not really necessarily cover this amount, depending on their age. Somebody's 80 years old and does this and got 30 years. Not going to happen. You know what I mean? So they're just in it to sell the home. You got somebody that's 40 years old and does this. They got long ride. They're going to be 70 when this house is paid off. How would you like if I could teach you a way to pay the house off earlier? So this is where you come in, understanding what they have left at the end of the month. So guys, I know you're new to the house, but in this area, I work here. Even if you don't, you got to slide this one through. The average electric bill, if you were told, is probably $100 to $200 a month. It depends on kids and stuff like that. Do you guys also have a car payment? Get the big stuff out of the way, the car insurance, the food in the house. Does that cost you anywhere between $100 a week or 75? That's added in there, so on and so on. But at the end of this thing, you really got the added up number. You know what it is. You subtract it by what's coming in. But at the beginning, you need to know what they have. So again, I have to take us down and do this. Is that this is exactly the way I'm writing on paper right now, Rob. This is me writing on paper, white paper, a pen. So take this line, draw it down here, draw this over here. I got Matt, 65. I'll make him 40. 40. Got Shelby. I don't know why these names are coming. Shelby's 42, you know. Both bought a house for $250K. Matt, if anything happened to Shelby or anything happened to you tomorrow, do you have life insurance on? Now, but before I get into that, I'm sorry, how much is the monthly on the mortgage? Just for numbers reasons, I'm gonna keep it even. $1,000 a month, okay? If God forbid something happened to you, Matt, does your job give you insurance for her? Yeah, I have life insurance. My company has it, $50,000. So you don't get to keep that. If you get disabled or you're crippled or something like that, or you don't have, the ability to go to work, or you retire, that doesn't come with you. 9 times out of 10, it doesn't. So we don't want to face that. We want something to help her beyond that, because if you become out of commission, that's gone, and that's not going to help Shelby. So her income would be what? Shelby, are you working 200? Yes, I bring in about $3,000 a month. Matt, what do you bring in about a month that she's going to lose? Now, usually reverse it, instead of saying, what are you bringing in a month? Say, what is she going to lose a month without your income? And that sounds a little better than prying. So if I say, he's at about $5,000 a month, then this is a great deal. I know that $8,000 a month. Even if it was 5, 4, it doesn't matter. It's just trying to get the bottom line is the illustration I'm showing you this way. At the end of this situation, I know that, look, out of all this money, guys, that you have, you putting any money in the bank? Oh, yeah, we put $500 a month in the bank. I'll tell you what, if we took that money and did what I asked you to do, I would be able to show you something that would double your money over the years and make sure that you had an income at retirement. Because you two know, do you have a 401k or a pension or anything like that? Some of these guys say no a lot. The younger people today say no a lot to that. They don't come with it. If it does, great. Let him ride it out. That's fine. You can't do anything while he's involved with it. You don't want to, because he's doubling, getting matched or whatever. But at the end of the story, you're going to teach him how to, again, here's where the index universal life gets in. This is where you start with. But you're going to teach him how to take a number like this and put, let's say he puts, since they're young, he might be able to cover close to that. God forbid he dies in 15 years, you might be able to pay the back end of the house off. So long story short, I don't know. Let's say he spends $300 on a policy and it comes to 200 grand. Might hit the 250. What I would ask him to do, since he's putting $500 a month away, I would show him the interest on the policy at 7% on average, and I'd say, you're putting the 3 away, that's great. But if we put the extra 2 away, that's all interest earned money. So that's going to be your future. Now also take care of the cost of insurance that rises up in these things too. And over the years, he has that handled. So the policy stays in play for the full amount anyway. But at the end of this, guys, here's what you can do. If you make it to 30 years and you don't need this in place anymore, you're just going to take the cash value out. And at $500 a month, with $200 going straight towards the interest earned, you have a substantial amount of money at the end of this ride. You got $6,000 a year. So 6,000 times 30 equals $180,000. And if we add 70% every 10 years, 7% times 3 is 21, is it 21%? 30%. 30 years, 70. Let me do some math. I'll show you something real quick. So 7 times 30. 7% annually, 10 years, that's 70% times 3. That's 210% he's earned on this, okay, on average. Now, if I add that, I'll take the $180,000 and I add, what I say? How much interest did I say? Do you remember? 210%. That makes this $558,000 that they put away. So that's why you teach this. You show them how to do this. This is the greatest retirement plan that they could ever put together because they didn't have one. And as reps yourself, you should have one. We do. We shovel that away in there too. I'd like to double it, put more in, so it's $1 million, you know, try to get there faster. But long story short, you're teaching them how to get a retirement plan put together while they're protecting the house. That's one scenario, you know, and you're going to run into many. But what you did here was this. She's not going to be able to afford to probably stay there if he's no longer there, okay? Bottom line. She may be able to because she got $3,000. But at the end of this puzzle, she's got so much equity built up in 15 years, or so it's $150,000 or so dollars. She's probably going to want that anyway, and walk away with $150,000. Tell her to call you. Don't put it all on a down payment on a house. Put it away into an indexed annuity and put some down on a home. You'll be safe. So there's a lot of maneuvers you can make in a house, bottom line, you know, if you get smart at it. But what you were doing here is you were protecting the home and the equity again. But you can find a policy that can protect the whole number. You know what I mean? So as this timeline is 15 years, 30 years. Here they need to have $250K paid in. All right. Hell, they paid $400,000 for the house with all of the interest and everything. But $250,000 is where they're at this point, plus the house interest and everything. Maybe it's worth $400,000 itself. I don't know. Maybe it's worth $300,000. So they made money on the deal. But long story short, your job is to find a way in here to see the equity and teach them that she may need to sell. What does she need to do? Here's another timeline. It's 1 and 2 years. 1 or continue to 2 years. For her to survive here, she needs at least $25,000 a year to buy time to sell the house for the equity. So your job wasn't to, you can do it, you can try to get the whole number, protect the home, and if it fits in the budget, it fits, right? But if it doesn't, your job is to show them what to do and protect the equity in the house instead of the $250,000. If you die tomorrow, she pays the whole damn house off. Like, that doesn't make any sense to me anyway, because I would tell her, don't worry about it, you know, take a little, here's what I would do. I'd turn that $250,000 into an index annuity, double that every 10 years, but you could take the 10% out, make the mortgage payments with that every year too. But, you know, there's many avenues that they could take, of course, but that's what you're doing, man. You're trying to teach them how to sell. Really. Why? You know why yet? Why is she selling the house?
Maybe downsizing.
Yeah, but what reason is she selling the house for? What is the most important part of the puzzle that she's getting from this house after she sells it? Remember the word equity?
Yeah, equity. There you go.
She's getting the equity out. She's selling for the equity because she cannot afford to stay there. Now, if she does have the money here, from this point to this point, he's only 40. He'd be 55 at this point to die. He's most likely going to die from this era or this era. 9 times out of 10, nothing happens in that era of time. You know what I mean? If it happens, it's going to happen over this way. So if it does happen, sell them on a, you know, instead of a $250,000 policy, which might be more expensive, show them a $100,000 policy that not only will allow her to sell the house, but will pay the back end of the house off if she wants to do it that way. You know, because nothing usually happens here, but if it does, she has enough to pay the mortgage to sell the house. You know what I mean? So all you're doing with mortgage protection is protecting two things. Usually the back end when they die, or the immediate end, anywhere down the line. Maybe she doesn't want to live there anymore. Maybe she does. Maybe she can't live there. And that money rides them out enough time to sell the house. So you can sell a small policy, but you get paid $100 a month on it. You go above that, you know, you can get the $500 a month out of them. If it's $250,000 or whatever the number is, you can teach people how to do this to get larger premiums out of them, bottom line. And that's about it. Just remember equity. Protect the equity. Anybody else have any questions? You have any questions, Rob? Or I can answer a real quick while I'm doing this. Anything else, Rob?
No, that was it there. I was just curious on that process.
Just go over it again and again in your mind, protecting the equity in the home. And it all makes sense that way, you know what I'm saying?
So I won't be in front of nobody talking about fool.
And watch my videos on YouTube because it's all about protecting the equity in the home. Every single one. The problem is that you got to make them through them, get all the way through the video. And it works though, guys. People on YouTube, thank you for being here today. I appreciate your time. I want to take this out as a special thing for Rob here, and then I want to try to get some others on. So I figured I'd get everybody on, try to learn a little bit about, you know, door knocking, mortgage protection, how to do the process in the home, how to effectively get more premium out of people, how to find the annuity money. You know, it's all a simple system. Rob, you've seen the fact that it's a simple system, though. Once it's here, you know what I mean, it becomes a part of you eventually. You just got to get in and do it, man. So first things first, find some lead money. You know, I got somebody that's hungry, wants to go out. You got to come up with some lead cash. Don't eat out for a week. Don't put gas. I don't know. You know what I mean? But if you can afford the cheaper ones, that's cool too. So you look into these dollar leads, $3 even, you know what I mean? And we'll get started there. If anybody from Facebook wants to join the team, this is here every week. We do Saturday at 10 a.m. We do a couple during the week. And the training's for everybody. So if you're from different organizations, it doesn't matter. It's all the same industry. And if you feel that you want to join the team, text join the 352-255-2594. Thank you guys for being on a webinar, and I appreciate it. And have a happy Sunday. Thank you.